Summit. A lot of energy at this event. The numbers keep going up in terms of how many people registered and made an appearance. I think it's in the vicinity of 10 or 11,000. We should have like a real-time timer to keep up to speed with that. I want to get straight to the meat on the investment outlook. It's such a pivotal conversation that needs to be had when it comes to venture capital. It's something I spent a few weeks now reflecting on and also talking to quite a few people in the front lines, in the trenches of all of that. So I want to start off with the Wamda report, which laid out kind of what happened in the first quarter. And Fadi, I'll begin with you in terms of, yes, there's a recovery. Yes, there's money coming in, but year on year, we're still down 62%. Run me through what your take is on the health of the ecosystem today.
Thank you. It's good to be here. I think the key element that we got to learn in the past couple of years and in Q1 is that this market is mature. This market has depth in it, and this market has experienced a cycle. You know, since for the past 10, since the interest rates were practically zero or negative, there was a lot of funding coming in because that's what the global story was in venture and in anything else for that matter. I think it was a natural process for the industry to experience a cycle, and I think this cycle is very healthy. Entrepreneurs will get to understand how to build businesses for profitability. Funds will understand how to manage with entrepreneurs and businesses that are going to be facing a cycle of a relatively down cycle and no free money anymore. So you have to, the fund has to optimize, the entrepreneurs have to optimize, and I think in general that this is a natural story that happens everywhere, and I think it's very healthy for the ecosystem here. Now that the funding is down in Q1, I think there is, if you dig a little bit deeper into the numbers, you'll see that in Q4 there were a couple of startups or scale-ups that raised substantial amounts of money. And then as you jump into Q4, naturally these big ticket items are not in Q1, and so you will see a dip here. But I think the market is recovering, and I think it is an asset class that more and more people are seeing that it is an investable asset class.
Faisal?
Yeah, I would definitely agree with Fadi. I mean, you know, the numbers sometimes could be a little bit misleading because we still see quite considerable funding coming into the market, especially in the beginning of Q1. The number of deals is actually more than the number of deals in Q1 of 2023 or the quarter before. It's just that the quantum of capital is a bit less. But all the signs of recovery are there. The maturity in the market is just making investors pick much more wisely, pick companies that have a clear path towards profitability, and companies that have shown that they are resilient enough to be able to raise capital in these more challenging times. So I think a lot of the positive signs are out there, and I genuinely believe that vintage 2024 or 2023 is going to be one of the most rewarding vintages for investors who have the appetite and are willing to make these investments.
Yeah, I like the term vintage. Alex, when we were catching up just a few minutes ago behind stage, you said, Yousef, we're still relatively young as an entity within Standard Chartered, 6 years. I wonder, when you look at that time horizon, I mean, you have a lot of data to work with, which would be different if you're going back to 40, 50 years. But within the last 6 years, and when you look at where we are today, what are you seeing in terms of the figures?
Well, you know, what a world of difference, right? So 6 years ago, when we set up SC Ventures, funding was not an issue. B2C companies were burning cash until no tomorrow and no expectation of a path to profitability. You could raise money on a term sheet and a white paper. Actually, forget the term sheet. White paper is good enough, and that's obviously changed. In the fintech space, we also thought 5-7 years ago that, you know, we thought, you know, I didn't think this, but, you know, some people were saying fintechs will take out banks, replace the whole of the dinosaurs, and obviously that did not materialize either. So a lot of things have changed. In today's environment, an element of the pendulum swinging back, an element of perhaps people taking a little more time. You asked me before, did we have a good first quarter? The answer is yes, but then I had to reflect on this. Actually, you know, we made a bunch of announcements in the first quarter, but they were last year's deal that we were closing now, meaning everything takes more time. There's more meetings. If you're a new fund and raising funds, then it takes more time. If you're a startup and you're past seed but pre-growth, then it's pretty hard right now. And in part because of the environment you're alluding to and rates and all this, which I would echo, and the maturity which professionals are showing, but also because there's an element of people being on the sidelines. Who's going to survive? You know, what consolidation will take place? You know, am I dealing with a going concern startup or a going concern fund? And so there's behavioral characteristics that are explaining as much as the you know, interest rates and geopolitical environment, I think. So it's we're, you know, I say we're nascent. We're nascent unit building startups and deploying capital. But what a world of difference between then and today. Yeah.
I mean, I want to flesh that out a little bit, because even if the Fed cuts, and the big debate, of course, is how many times they're going to cut, but that keeps getting shifted out. But let's assume they even cut. Interest rates are not going to come back to where they were prior. And so money supply is going to be tight. That's going to feed into the ecosystem. So you have the macroeconomic uncertainty. Then you have the geopolitical uncertainty, you know, be it the wars or be it the US election, which is a whole different headache as we get closer to the end of 2024. Out of the spectrum of risks, Fadi, what's sort of highest for you today?
That's a good question.
Difficult one, isn't it?
So look, risks, geopolitical, I mean, it's there. I mean, look, we live in a region that has geopolitics as built in. So when you want to talk about geopolitics, I'll say, okay, so what? We wake up every morning and we have had for the past 40 years geopolitics as an issue. So I don't think that is, it's a bit of a concern, yes, absolutely. I mean, you can't write it off, but our risk appetite and the way we view our own markets is different. But maybe the over-competition between China and the United States is a big issue for us here, because we sit in the middle. We want to have relationships as countries and as companies. We want to have relationships and a win-win situation between both worlds. And we feel that maybe that could be a risk and a challenge, and you will feel that. You know, there'll be pressure from both sides, but at the end of the day, I mean, one needs to decide how he wants to conduct business, where you want to align yourself with, and think about it. But this is as much as it goes. But look at this city, for instance. Geopolitics is of benefit to the city. So because of its stability, because of its depth, because of what it has done over the years in the regulatory space, because of the incredible infrastructure that it has. So people are coming here. I was at the DFM annual event, Capital Markets, a couple of days ago, and I was listening to all these speakers saying that there is no problem with talent because people want to come to this city. So we need to think of that, those of us that live here, and find that there are more opportunities than we would think of in terms of risks. And then risks are opportunities for us, right? Risks are opportunities. I built my business over 40 years in this region by people telling me every day, why are you building business in this region? And so we built a few $1 billion worth of a business, and I still say, yes, there's political risk, there's geopolitical risk, but that's the region, it's built in. That's my view of it, so.
Faisal, let me get you to weigh in on this as well. In your
I didn't mean them to. I didn't tell them to clap.
I was going to make a comment on Aramex, but then I thought I don't want to be seen endorsing it, so.
Leave that alone.
It's actually very difficult to speak after Fadi, because not only does he have all the good ideas, he just leaves nothing for us. But I mean, I completely agree with what Fadi said. I think geopolitics has been always an integral part of this region, and we all grew up around a neighborhood that is geopolitically unstable. But I think what our leaders have shown us here is that they see every risk into an opportunity. And they try to then see what could be done to capitalize on the circumstances that we're currently living in. And if we see the trajectory of Dubai through the past 40 or so years, it has always been able to look at the challenge, understand it, and then find the solution for it. And that has given Dubai the resilience that it has today. Today, if we talk about investments and fintech specifically, fintech is a global offering. Today, a lot of the disturbance that's happening in other markets around us creates an opportunity for Dubai to really host some of the best companies in the region. We've made investments in companies that have started to be African companies or have started to be companies in other markets. And eventually, they actually relocated to make Dubai their head office, and they have grown and they've really managed to use Dubai as a base. One of the CEOs that works for in the African markets used to say that it's easier for him to travel within Africa from Dubai than to actually travel in Africa from within Africa, in terms of connectivity, in terms of process, in terms of, and where he can keep his family and recruit talent. So actually, we see this overall trend being very much favorable for businesses investing and setting up in Dubai, and we believe that this is really the beginning of a great era that could potentially be very rewarding for the whole industry.
Alex, when you sit down with some of your decision makers, just run me through how you weave in the geopolitical and the macroeconomic risks. I mean, how does that weigh on the outlook for the remainder of the year? What's the thing that keeps you up more at night? Or maybe there's something entirely different.
So I'll give you something entirely different. You thought it was hard to speak after Fadi, but I'm going to add a risk to the two of you. So I think enough said. Actually, I echo everything you've said, but enough said on geopolitical risk. I hesitate to say it's a feature, not a bug, but certainly it's the norm, not the exception, and we have to be able to navigate this. I think also enough said on interest rates. They come up and down, right? That's called a cycle, and we have to be able to navigate a cycle and make decisions accordingly. And so there's an element of that's the norm as well. I'm focused on business risks, the likes of buzzwords, the buzzword of the day. We have to invest in blockchain because that's, we cannot have a conversation without it. What is it today? It's Gen AI, and it will be something else again. We had metaverse too, and all these are very important foundational technologies. But the risk here is to build ventures or invest in businesses that are essentially a solution looking for a problem, and losing sight of the business model, which is ultimately serve clients the way they want to be served, or the way they should be served, and genuinely addressing problems or gaps that are worth solving, and building viable businesses on the back of this, as opposed to running and pouring the same money behind the same buzzwords, which is perhaps a risk of our profession.
Fadi, I can see you want to jump in.
No, I just want to add something. So again, back at the DFM capital markets event a couple of days ago. So one quote caught my attention, is that this lady at one of the panels said, "We used to come here." She ran fund manager. She used to say, she said, "We used to come into this region to take money to invest outside. Now we come to the region because there are opportunities here." I mean, that's a big statement. That's a big statement. When you talk about risk and geopolitical risk, and people say, well, we're coming to Dubai and we're coming to the region because there are opportunities, which means they're going to bring in FDI and come and invest in the region, that's a big statement. There is something happening that attracts people to come to this town.
Absolutely, yeah. And that's in terms of some of the key deals that you're watching or you're working on, such that we can put a little bit of color to this conversation and some numbers. So I'm going to follow up directly with you, Alex. If you could kind of lay out for us at SC Ventures, I mean, what's cooking there? I mean, we know the stuff that's in the public domain, so my hope is that you're going to make some grand revelations this morning. Go ahead.
No, but I first wanted to just echo what you just said, which is, the region has got real momentum. It's, starts with a vision, which is top down, but the vision and the economic agenda. It continues with a methodical building of an ecosystem of capital, entrepreneurs, technology, academia, even journalists. All of us have a role to play in that ecosystem, and that's what it takes to be a successful entrepreneurial hub. We have first we resisted the temptation to make big announcements and launch a presence before we had anything of substance. And we started building a couple of ventures. Mysore, Apro were our two, endemic ventures in the UAE. We've gone in a relatively short period of time from relatively little to, at this point, 6 different ventures and a JV we've announced in the IFC some time ago together with SPI to invest in digital assets infrastructure specifically. So meaning from 0 to approaching 100 people in the region in a short period of time. And so I think that's just a proof point for what Fadi was saying, that the level of energy and the level of momentum is very real, and we're seeing big things happening here.
Faisal, in terms of some of the work that you've been doing over the past year, greenfield listings, were popular at one point. There was some speculation as to whether or not they're going to come back with vigor. Now you're putting together several funds. Technology fund was one of them. You wanted to make Dubai sort of a center for tech, which is one of the reasons that we've gathered here today. What can you tell us about the progress you've made, or maybe some of the breakthroughs you can announce?
Yeah, no, thank you for that. Obviously, fintech has been a key theme that I've been looking at for the past few years, and I believe for all the right reasons. It is an industry that is growing, and that the Dubai and the UAE is well positioned to be sort of a capital for a lot of the activity going on there. So I've been making investments directly alongside some of the leading VCs globally, and one of the VCs that I sort of built a close relationship with is a European leader called Speed Invest. Who have been investing successfully in fintech over the past 11, 12 years, with amassing quite a meaningful portfolio in the MENA region. So now we have this partnership, and we're doing more around the fintech space. And we've seen firsthand how some of the companies that have been outside the UAE, that have basically relocated to the UAE, have really managed to achieve a lot of success. One of them is a company called Move, which was a fintech mobility company, originally catering to basically sub-Saharan Africa. But then quickly the founders realized, when they met senior leadership here in Dubai, including Hamid Al-Ali, including His Excellency Hilal Al-Marri, and saw the support system from Dubai that could be there. They've relocated the company here and continue to scale. Today, this company has the largest EV fleet in a single city out of Dubai, more than 1,800 Teslas that they've been financing, and scaling, exceeding $100 million of recurring revenues. Uber just invested in this company at a valuation of $750 million. So this is a company that has scaled in a short period of time, making Dubai its core home and base, and a lot of similar stories like this we believe are currently in the making, and these are going to be regional unicorns that otherwise would have been would have belonged to other markets.
I'm going to try and push you on that just a little bit in terms of giving us a number, quantifying some of these new investments. Could you even give us like a ballpark figure? A, those investments. B, what else you're expecting going into the end of the year, going into 2025, that we can look forward to?
Yeah, I think the pipeline is very healthy, because as it was mentioned earlier by my colleagues here, we see a lot of discipline now from the investors. We see companies that are raising money in today's environment are really good companies, because investors are very careful where they deploy their capital. And these companies are companies that I believe, because of also sort of relatively a slower market, valuations are also much more reasonable. So a combination of good companies, clear path to profitability, much more reasonable valuations, and then still having the tailwinds that are there, we believe, and as I said earlier, 2024 vintage would be potentially a very rewarding vintage for investors. So in terms of numbers, I don't know if I helped you with that, but I think there's at least 5 or 6 deals that I think would fetch meaningful capital in the coming period, and would be unicorns that are related to this region.
100 million, $500 million, $1 billion?
In capital committed?
I'll take it over.
I would say more.
Okay. Fadi? your thoughts on more? Okay, you're saying it's going to be more than that. What about some of the...
Look, people follow opportunities, and as companies, one thing we need to understand about this region is that, specifically the UAE, is that it used to be a Series C, Series A region. So lots of them natural. This is like all new markets. In the past 10 years, you would see a lot of early stage companies, angel investors, etc. But now you're seeing Series C, Series D, pre-IPO, IPO ready, etc., etc. Big funds coming in. General Atlantic, when it announces it's coming to set up an operation in Dubai, why would General Atlantic come to Dubai unless there is an opportunity here? Wellington is a huge multi-billion-dollar US fund is coming and setting up or has already invested in some of the startups, scale-ups in the region. So that's a statement. And then when other funds across the world see these guys investing, they're going to say, okay, there's something happening in that region. And these big funds specifically like de-risked assets, right? So when Tabi is raising a Series C or a Series D. Tabi is a buy now, pay later. It's one of the most successful and profitable buy now, pay later companies in the world. When you get somebody like General Atlantic that says, okay, this company is good, I'm going to invest in it, I mean, that's a massive statement, and it says that there's an opportunity in this region, and you will see so many more coming into this region despite whatever challenges that people might talk about. So I am a very bullish. I mean, you're talking about $100 million, $200 million checks. This was unheard of 3-4 years ago. You couldn't find funds that would write a couple of $100 million checks. JP Morgan made available $700, maybe $800 million in debt for Tabi, for its buy now, pay later. I mean, that's close to $1 billion of financing available for you to conduct your business. That's a vote of confidence in the region.
How many people use Tabi here? If you can raise your hand if you do.
Well, you have to use Tabi if you buy online. Then you have no choice, right?
I'm not seeing any hands yet.
Well,
anybody?
I don't think they live here.
Oh, there's one over there. Okay.
I do.
They probably do, but they don't know.
Fair point.
That's the other one.
Or they're well off. They don't need to pay later. They just pay cash.
I think just echoing the point, vintage is so important, right? So we were saying earlier, it's been tough for startups and it's been tough for funds. In the same time, because of the vintage that's coming up now, whatever comes out of this trough is going to be pretty good, pretty resilient, or remarkably well funded, or both. But it's going to be a very good vintage in terms of building and investing in ventures, and I would go north of $1 billion as well.
Alex, in terms of what could be done better? We talk a lot about what's been done well and what's been done right, and the growth and the exponential graphs and everything else, and that's fantastic. But as we all know, the question is what's next and what can be improved on even further. That's kind of in the DNA of Dubai, right? If you could share one bit of insight where you're saying, you know what, if they did this differently or if that shifted over there, it could really unlock a sort of another wave, or would you say that's not the case at the moment, Alex?
Well, that's not the case equates to saying more of the same, and I do think there's an element of more of the same, if nothing else, because showing consistency and being persistent about it is part of what it takes for any ecosystems to survive through the cycles. So I think there's an element of that. Having said this, if you ask me for what could improve, I think what we mean by capital is actually very different pockets of capital. So seed stage is one thing, early stage is another, growth stage is generally speaking available. There's I think a sweet spot for investing at the moment, which is also the hardest to come by, which is pre-scale or scaling, but not quite growth. So in between a Series A and a Series CD, which is B, etc. And that is a harder pocket partly because of what's going on in the market generally speaking. But this is where we see startups struggling the most, and also where some of the bigger investment opportunities are coming at the moment. I also think, and perhaps it's an emerging trend, by the way, which is, the same way we're seeing growth capital and PE sort of getting into earlier stage in order to secure the pipeline, which is hard. I'm betting that venture capital will go into building and seed in order to secure the pipeline. You understand a lot better what you invest in, And you know a lot better what you're doing when you've been involved in building it than when you're just looking at it for the first time by the time you know it's a Series B or C stage.
Faisal, you sit down often with policymakers, you attend some of the Majlis events that are held. I mean, it's a fascinating feedback loop. Run me through, what kind of ideas you are pitching at the moment and where you think there could be a sort of another step forward for Dubai and sort of the UAE more broadly.
Yeah, I mean, we're all here beneficiaries of a phenomenal leadership that listens continuously and in real time to the market, to the stakeholders, and ensures that always policy is in line with what the industry needs. As vice chairman of the Dubai Chambers, we work closely with a lot of those sort of think tanks, and we see how the government keeps on pushing us to come up with, what else can we do to achieve more? What else can we do to encourage the private sector? So this mentality is a big blessing, and it's easy said, but not easily done, but we see it firsthand. So it's an ongoing dialogue and discussion and an ongoing development innovation that is bottom up from what really the industry needs, and then reflected into policies that are put in place in a way to really encourage and support. And this is why today, all of us are here, because, something has drawn us into this ecosystem that works. And that's why we see the opportunity, and that's why we see the potential. And I think as more of the same is really the name of the game here, because the formula is working, and as long as they continue to do it this way, I can only see that we will Dubai and the UAE will always be ahead of the curve.
Fadi, you jet set around Arab capitals. You've seen the cycles they've been through, be it in Cairo, Amman, Riyadh, or sort of Dubai. When you reflect on that question of what can be done to raise the bar, especially when the competition is becoming so fierce. I mean, everybody's throwing money at this. Everybody wants to be the hub. Where is the potential room for improvement?
So yeah, I mean, we're going to continue to say a positive story, but I'm going to tell you a couple of things that in my observation, that are starting but need work. So the regulators in the region are catching up to the startups, and they need to move faster, in my view. Regulators, specifically, we're in a fintech event. The most difficult regulatory environment is to regulate fintech because of global challenges, not only local challenges. So AML, money laundering, all sorts of regulatory stuff that requires a new way of thinking, because when you're digitizing everything, in terms of payment, in terms of banking, in terms of lending, everything is becoming digitized. Central banks were built for a different world, with all due respect to them. They're regulating banks, and then suddenly also these very fast young entrepreneurs are coming and are hungry to get regulated. And so there's a bit of disruption here, there's a bit of change, there's a bit of learning. But I'll tell you, I mean, so, in my view, they need to catch up, and they are trying to catch up, but there is a dialogue now. This is new, right? This is new. They see the opportunity, because there is the political leadership across the region, and specifically in the UAE, but across the region, that recognizes that we want to build the economies of post-oil economies. We want to digitize our economies. So we want to enable this environment. And so the regulators follow suit. So there is a political decision that says, here's what we want to do, make it happen. So there is a dialogue. I know a lot of the startups go and are actually having a dialogue. Sometimes it takes longer, but they're having a dialogue. Number two is in terms of funding. So yes, sovereigns have finally come into the game in Saudi Arabia and in the UAE. Mubadala, ADQ, etc. are enabling the ecosystem here. I would have liked and still like to see that the big family offices in the region think that this is an investable space, and they need to jump in. There's a lot of them are, there are some families that are building venture, internal venture, corporate venture funds, right? We know 2 or 3 of them that want to invest in businesses that relate to their own ecosystem. But I'd like that we see a wider range of funding coming from the big family offices. Again, They will do that once they see exits, once they see that when you invest early stage or later stage, you're going to be able to actually make money in this. And we're seeing that. So let me give you a couple of examples that you don't see big in the news. So when a Tabi or a Salla is a big e-commerce company in Saudi Arabia, make big rounds. So when you hear about these big rounds, a couple of $100 million, you know what happens? Is the early stage investors are exiting and making 10, 15x on their money. You don't think of it as an exit because the company is not exiting. It's not going public. Yeah. But the cap table is being, they say cleaned up, is being optimized, let me say. And the very early stage angel investors are making 10x on their money. So people are fearing the returns. One of the funds in Saudi Arabia, by the way, I won't mention the name, on their first fund, because of such an event, returned 2.7x of the fund just on a secondary transaction. So
we got
trickling down. It's trickling down.
We got you fired up. I love it. Alex, I can see you smiling. Do you want to weigh in on any particular angle here? He's like, no, I'm out of here.
You know, we were musing earlier on maturity and what it takes to survive the cycles and still be here after 5 and then 10 and then 15 years and then 40 years ideally. And so getting to the point where we're having adult conversations around fundraising, around valuations, and understanding that this is a long game which we're all playing for the better good of financial returns, but also society and what everybody wants to be in for. So I can see the energy and the effervescence, and this is all good. An element of maturing and maturity, which I think we're seeing happen here, certainly is desirable and a good thing.
I mean, SC Ventures facilitated Standard Chartered's first ever landmark investment in, the blockchain company. One of the earliest adopters in the arena. Yep. Your tagline is rewiring the DNA of banking. In terms of what the next milestone will be for SC Ventures, what is that? You've laid out some of your initial ideas, but maybe we can just find something that we can hold on to as big an accolade as the one I just talked about.
Thank you. Thank you for recognizing this. I think that the themes in some ways are the way to think of this, which is going back to serving clients the way they want to be served, and across retail customers who don't want to go to a bank branch any more than they want to see a dentist, but want financial services incorporated into their lifestyle, to SMEs, the forgotten middle. More than half the GDP of any of the markets we operate in, but it's SMEs, trade financing, supply chains, and this is a super important part of the world as far as the trading hub is concerned. And then across the board, digital assets, which is next generation rails, in dire need of institutional adoption and therefore institutional infrastructure. I think the next one is sustainability. It's one thing to do business sustainably and being conscious of it and favoring green transition and all that. It's another thing to have sustainability, including green transition, including financial inclusion, at the core of the business model, and coming up with businesses that will be commercially viable with ASG at the core of it. And I think this is the next big wave of venture building and investments and innovation that we're about to see emerge. And obviously we're working on it. Stay tuned, but more to come on that.
Faisal, some thoughts on sustainability and what you're doing as an entrepreneur? I mean, you're obviously involved in quite a few businesses, and then you've got your role at Dubai Chamber. Just run us through what the conversations are like there.
Yeah, I mean, sustainability is a key element that has to be taken into account. And today, when we look at sort of the investments and in fintech in general, you need to have that commercial sustainability for the businesses to be able to grow and maintain and achieve the success that they hope to achieve. I mean, but it takes time. I mean, these things take time, but I think we reached a point now in the cycle of maturity that really sort of shows for the progress that has been achieved. I mean, I just read also in a report that the UAE has joined the top, just for the first time, is a top 10 city in terms of attracting and raising capital for sort of fintech and fintech investments, which is a huge achievement over a short period of time. So all those indicators are sort of pointing in the right direction, and I believe today, being able to integrate those themes within the investment strategies that are put in place allows for the right sustainability.
And I would just add one other point, which is, the blockchain Web3, which you mentioned earlier, has had its fair share of FTX and other things, early phase of adoption, roll-ups, and then at some point institutionalization and standards. And I think the same applies to ESG, where people have talked about greenwashing, but an element of conducting business with the integrity and with the rigor of, we talk about the DNA of a regulated financial institution, but generally speaking, the DNA of doing things right and not taking shortcuts, which is going to be absolutely critical as we embark on completely different asset classes and different business models.
Fadi, one of the points you made before we came on stage was about how the rise of Saudi Arabia in VC was distorting valuations. I'm wondering to what extent that distortion extends to the rest of the region, or whether it's still pretty much compartmentalized. What are you seeing in the numbers?
So the Saudi ecosystem is a bit younger than the one here in the UAE. It's really, there's, if you don't know, there's about 53, 54 venture capital funds in Saudi Arabia. And so there's a lot of money. When there's a lot of money, it means the entrepreneur can be a bit arrogant, I'll say that, and be very picky on which money he wants to take, and then decide to take the highest bidder, which I think, in my view, my humble view of 25, 26 years experience in venture, that's wrong. He's gonna pay for it down the road. Because when you do very high, especially early stage valuations, you're gonna, when the market turns, and believe it or not, markets turn, right? We all know markets turn. So you're going to, what are you gonna do? Down rounds, etc. With all due respect, there's nothing, Saudi ecosystem, I'm the last one to say more money is bad, because I've been preaching for years saying there isn't enough money in the venture industry. It's great that it's there. It's great that you will have some successes and some failures. Mark Andreessen, the A16Z founder, big venture fund in Silicon Valley, used to say, if you don't have enough failures, then your ecosystem is not mature. And so it's good, it's healthy. I have no problem, but and then one has to pick and choose where you want to invest and how you want to invest, whether the company is overvalued or undervalued. That's a product of a decision of a VC taking his own risks. In more mature markets, you're seeing entrepreneurs a little bit more careful on how they value their companies, but that's the nature of the markets. I'm not one that is going to judge markets. Markets will always regulate themselves and bring reality to every investor or every founder.
Any other views on Saudi? I'm opening it to the remainder of the panel.
Yeah, as Fadi said, I think Saudi is a big market on a standalone basis, and obviously the government wanted to encourage more capital and more encourage funds to get established, and I think they achieved that successfully. Obviously, that has a knock-on effect. Obviously, when you have more demand than supply, then clearly something is going to be compromised. So currently, I think Saudi has overshot on the availability of capital, which means that valuations will effectively be on the higher side because, as Fadi said, founders now have a lot of choice, and a lot of those funds have to they need to deploy the capital fast. And so, as an investor today, we're seeing Saudi as a hot market, and we're trying to be a bit more careful in where we make our investments. Whereas if you look at the UAE and Dubai specifically, it is catering to the wider region. So businesses that are here are not looking at the UAE's market as a specific market. They're looking at it as a hub to a much wider catchment market, which is really the growth markets. And so those are more governed by so there's much more supply when it comes to founders' opportunity. Access to talent is also much better here. A lot of, as you all know, people love to live and work here, and this, is part of what the ecosystem presents. So the discipline here becomes easier, and access to deal flow becomes, or at least selecting the right deal flow becomes something that we could generate the return. And that's why, as I mentioned earlier, we're very optimistic that this vintage going forward is going to be very, very rewarding for investors.
I'll give you a different perspective internationally. I live in Singapore, and for the last 10, 20 years, I've lived through the competition between Singapore and Hong Kong. I've lived in both cities, by the way. I love them both, and they're great ecosystems. And the day Singapore thinks they have a bit of an edge, well, guess what? Dubai is giving them a pretty good run for their money. So competition's good.
All right, that's a pretty diplomatic answer. That's a good way to round up. I'd like to thank our terrific panel, and of course, a big thank you as well to our wonderful audience. We'll be seeing you over the next few hours and next couple of days. Thank you.